All right, morning everyone. Welcome to another episode of Bitcoin with your host Tone Vase, and I am once again joined by the one and only Jimmy Song. How you doing, Jimmy?
It's going great. We don't really. I don't think we've ever done a show on a Sunday morning, but I'm gonna attend second service at church, so I think I'll be okay.
All right. Yeah, a little random. Like lots of interesting things happened over the last few days, and we couldn't help but make fun of them. In our last show, we really dug into centralized databases, and this time around is not going to be any different. So let's get the show on the road. I know it's Sunday, and both of us have a lot of stuff to do. So without any further ado, let's get into it. Let's get back into centralized databases. To continue from our show the other day, Steemit sold itself to Tron. Tron continues to buy up other blockchains. And in a very, I mean, how long before Tron buys Ethereum at this point, right? That was the big joke coming out of Satoshi Roundtable. Yeah, so Tron has bought Steemit. I was in a big war with Steemit going back to 2016 because Steemit is the definition of a true shitcoin. Steemit had early on pump that made a lot of the early adopters rich. Then it had a secondary pump to allow these early adopters to cash out. I have a nice long article about how Steemit works. It's titled "Steemit Started as a Scam and Only Got Worse." And I released this graphic in July of 2016. And this was the old pictures of Mount Stupid, which I used to tweet out on a regular basis. Around 1.5 years in the blockchain space, that's when you really have no idea what's going on. I actually put the DAO here about a week before it imploded, and other projects have been up here as well. So let me give you the TLDR on how Steemit works. One guy comes up with an idea of how to get rich for himself and up to 30 friends. Okay, so he then goes ahead and releases a bunch of code that prints monopoly money. They then mine this monopoly money for 30 days without telling anyone to kind of have millions of this useless monopoly money. Then they make an announcement that they're going to make the greatest decentralized website, if that's possible, the greatest decentralized website to post your content. And they're going to pay you for this content in the monopoly money that they just printed. After 1 month of mining, this garbage goes into proof of stake mode so that the 30 people that mined it very early on get to print perpetually more money for themselves. So about 95% of all the new printed monopoly money goes into the hands of about 30 people. 5% of that gets handed out to people that promote Steem and other notable personalities so they can keep promoting Steem so that idiots start posting on the most centralized website known to man, which is Steemit, the pile of crap that Tron just bought. Because these 30 people, the more Steem you have, the more power you have as to which articles get viewed. So you have 30 people controlling all the content, with 3 of them controlling the majority of that. So you have a small group of people controlling what is seen on the website. They're printing 95% of the money for themselves, and they give the scraps to the peasants that go out and continue to promote Steem. Anyone dumb enough to buy this garbage on the open market from these early adopters deserve to lose all of their money and no longer afford an internet connection. So Steem, so Dan Larimer left long ago. Ned Scott has just left the project. He was the CEO, and they just sold off this website. And what else can you say about these centralized databases pretending to be blockchains printing their own money, Jimmy?
Well, I mean, Tron has been buying up stuff like crazy, right? Like they bought BitTorrent, the company. I think they bought Poloniex at some point. Now they're acquiring Steemit, and this speaks to sort of like the desperation that a lot of these altcoins face, which is that they want a thriving ecosystem. Otherwise, there's no reason to own the token. So they buy up anything and everything that will get them users that will actually use the platform. Now, Steemit, say what you will about like their centralization and scamminess and so on. They do have a decent number of users, right? There are people that are constantly posting,
Yeah, no,
hoping to get tips from whales and so on.
Jimmy, human stupidity has no bound. So yes, Steemit has a lot of users.
Yeah, and that's really what they're trying to acquire, because they can't acquire anything with actual apps on their platform. So they're this is their strategy, and this has been Justin Sun's strategy, is to get as many people sort of like mentally and emotionally invested in their coin as possible. And then at that point, they can I don't know, like run a bigger Ponzi scheme or something like that. But yeah, I mean, Tron is clearly a shitcoin, as we like to say in the industry, and they're you know, they have to have some way of trying to get new users, and this is their strategy, because we know they don't really have developers to develop anything. I mean, we saw with you know, the last show that we did with Blockstack, they had like a developer incentive program, and nobody really even wrote anything, and they were offering like hundreds of thousands of dollars. It just made people want to write like really crappy apps so they can get that money. And Tron has a slightly different strategy, which is to just go and buy up users. I mean, airdrops are another way that people have tried to do this. They don't really work.
Yeah, so I've been in a battle with Steem since the day I heard about Steem. I remember exactly what it was. I was up at Lake George on my annual trip. This would have been would have been like the weekend of July 4th, or like right around that, in 2016. And I have to find that video on the World Crypto Network where like I saw it exactly for what it was from the first second. And then I went through the entire white paper. By the way, so I got to get this document back up. People have to, here's something people forget. Like that famous Satoshi line. If you don't understand it, where is it? Here it is.
It was to Bytemaster, who
right.
is Dan Larimer. Yep.
Yeah. So I'll read. I'll quote Satoshi. If you don't believe me or don't get it, I don't have time to try and convince you. Sorry. And that was said to Dan Larimer, the official creator of proof of stake scams. But I just want to, before we get off this Steemit nonsense, I just want to read the following from the Steemit white paper. Because everyone benefits, everyone should pay. In other words, no individual user should be expected to pay for anything, but instead should be paid for everything they do that brings value to Steem. That is in the white paper. I shit you not. And here's another one. Furthermore, Steem pays people to figure out who should be paid. This kind of thinking is revolutionary.
It's actually nonsensical, but yeah, I mean, it's just like, this is what people that aren't like, don't understand like scams, they get sucked in by paragraphs like this, right? Like, this is exactly how Craig Wright runs his scam and so on, is that you say something that sounds good but doesn't actually mean anything, or sounds complicated and no one can actually figure out what it means, and you can just claim that it means whatever you meant it to mean whenever it's convenient. You know, like, just it's a scam. What can I say? Like paragraphs like this, sentences like this is part and parcel of what scammers do.
All right, so let's move on to centralized databases for 200 for the day. And this brings us to IOTA. Oh my God. Remember when we called IOTA a scam and a centralized database the moment we heard of it? Well, here we go. It didn't take long for us to get some proof. So IOTA had a little hack, and law enforcement called, And here's the result. I loved Udi's tweet. When law enforcement gets involved and you literally turn the shitcoin off. It doesn't get any better than this. So IOTA has turned off what they were calling a blockchain. Look, what happens to all the people? Like every time we call this garbage, we get like a barrage of people that are heavily invested in this nonsense, that are screaming how revolutionary it is. Do you people just move on to another shitcoin? Or like, what do you do? At what point do you admit that none of this shit actually is decentralized?
I mean, basically, what IOTA is doing is they're completely centralized, just like Steemit or Tron. I mean, it's a travesty that these guys call themselves decentralized. You can't sell something that's decentralized, okay? Like you can't say, okay, well, we have this decentralized network, but yeah, we're gonna sell it to Tron. And you can't do this either. We have this decentralized network, and we're gonna just turn it off, right? Like we're gonna pause the blockchain or something like that. It's ridiculous, and like the entire idea of IOTA is using DAGs or something like that, which is completely useless in like a centralized context, because essentially what they have is this coordinator service, and it's meant to sound kind of innocent. Oh, it's a coordinator. It's not anybody that's like really centralized. Actually, it is. The coordinator decides everything, and I am sure they're going to refund the money back to these people or something like that, or compensate them in some way to keep at least some pretense of decentralization, what Nick Szabo likes to call decentralization theater. But this is exactly the sort of thing that you see in projects that don't know what the hell they're doing. Is they have security vulnerabilities like this because they don't think about security. They think much more about marketing and getting more people on board and buying companies and stuff like that, instead of actually, providing value to their users. So this is essentially what's happened. And I know that when we criticized IOTA a while back, I mean, I got like direct emails, like just like slamming me and saying, how can you say this about this coin, blah, blah, blah. A lot of people that are that are sort of like paid shills for these things. And I suspect that's who comes and criticizes us when we tell the truth about this stuff. But yeah, I mean, it's so obvious that these things are completely centralized, and they suffer from the same things that centralized players that have really bad technical staff like end up doing, which is, incidents like this. And the fact that they have to like post an incident report like this just kind of goes to show like how not just how centralized they are, but how incompetent they are.
All right, this goes to your statement the other day that there's no competent developers in any of this stuff. But hey, I just want to comment real quick on a comment in the live chat. And of course, someone is defending Steem and Steemit. There always is. And someone is adamant. Steemit is not Steem. Steemit is not Steem the way Bitcoin with a capital B is not Bitcoin with a lowercase b. Okay?
Yeah, I mean, guys. I mean, the thing about Steem is that they made it like super duper complicated, right? Like it's not even like just Steem, the currency, and that's it. It's Steem, the currency. Then there's like something called Steem Power, and then there's something.
Oh
called
yeah,
Steem
no,
dollars.
I explained it all. It's right here.
Yeah. I mean, it's like it gets right incredibly complicated, and they have to put all that in to confuse people. Essentially, you don't actually need any of that, but they wanted like stake lockup with Steem Power and all this other stuff. So they made it as complicated as possible. So like, so when people say literally, "Oh, Steemit is not Steem," well, I mean, in some sense, they're probably right. But really, what we're talking about is the whole project, right? Like, and that's what we're calling a scam. Steem, Steemit, Steem Power, Steem dollars, whatever, they're all a scam. Okay, and that's what Tone and I are saying. If you want to get pedantic and say, well, technically this piece isn't exactly this other piece, and therefore you're wrong about everything. No, we're saying this is a scam, and we know that it's a scam. You know that it's a scam. Deep down in your heart, you know that it's a scam too. You just don't want to admit it because you probably made some money in it, or you have some money invested in it, or whatever. I mean, just like, dude, like if you don't want to admit to it, don't watch the show, right? Like, if or whatever.
Yeah,
It's
this.
just
Is this view? It's like I remember we were arguing with Richard Hart on the Law Show, and we're like, we say something, and then he says, "No, but it's not that because it's also something else." It's like, it's like, no. I didn't rob him because I also beat him up. Like,
yeah, this is exactly the language of scammers, right? They try to get you to look bad by figuring out some pedantic way in which you're wrong. I mean, generally we're right? Like this is a scam. Now, do we know all of the details of how the scam works? I mean, I think Tone knows a lot of it, but there's probably parts of it that are kind of hidden from us. That probably only Dan knows, or Ned knows, or something like that. But I mean, that we're directionally right. That's the main point here.
Yeah, look, I agree. Look, I read through that entire 48-page white paper. It was like probably the most miserable month of my life because I set out to prove the scam on every single page. And look, I'm sure there were a few pages where I stretched how scammy it was. And I'm sure I got a few things wrong, but for everything that I screwed up in how they're a scam, there's probably a dozen to where I didn't even realize how they were a scam. Okay.
Yeah.
And my other statement is this is the battle with Richard Hart, is that where he's like, no, we're not and this is the battle with I had with CZ as well. No, we are not a security of finance because we are also a currency. You can use it right there to buy your coffee. Like that's not an argument as to why you're not a freaking security of your company, because you're also a utility coin.
Yeah, I mean, these guys are trained in sort of redirecting the conversation to something that's completely irrelevant to the main question, which is, are you a scam or not? And it's like, well, you said this word ungrammatically, therefore all your points are invalid. And it's a rhetorical device that, like, you got to be careful about. And unfortunately, a lot of people are not sophisticated enough to know sort of like the psychological and meme and rhetorical warfare that's being waged against them, and they fall for stuff like Craig S. Wright as Jesus or something like that, which.
And we're getting a lot of Ethereum comments. Guys, yes, we still make fun of the Ethereum rollback in 2016, I think, with the DAO. And just because Ethereum hasn't done something as stupid as IOTA or Steam or the DeFi story we're about to cover, just because that hasn't happened in 2 years doesn't mean it's not coming. And it is coming.
Oh, boy.
All right. Speaking of DeFi, here's what decentralized finance looks like. Someone writes 3 lines of code, well, maybe a little more than 3 lines of code, executes 3 lines of code in a matter of a few seconds, and all of a sudden collects $360,000 worth of Ethereum. The details are right here. I think they turned this shit off too, so you can't do it anymore, unfortunately. Jimmy, you want to throw some details in here?
Yeah. So this involves somebody called some service called Fulcrum, and they do something called flash loans on Ethereum. Essentially, you could borrow however much Ethereum as long as you pay it back in the same smart contract. So it's literally a flash loan within the same smart contract. That gets executed. You both receive the Ethereum and you pay back the Ethereum. So that, I mean, if that sounds like financial wizardry and like derivatives galore, kind of like what caused the 2008 crisis, that's what this is.
Jimmy, this is absolutely necessary for the future of an economy. Every transaction has to be instant. You have to be paid by the second, every second, when you have a job, and therefore you need to be able to borrow money and pay it back instantly within a second in the safe smart contract, because this is what the world has been missing in order to get the poor out of poverty.
Well, so they instantly borrowed 10,000 Ethereum, right? Which is, I think, like the limits of the smart contract. It might be one of the limits or something like that. Then they transferred about half of it to one wallet to short something in some other DeFi thing. So they shorted something in some very illiquid market, and then they used the other half to actually go and drop the price of that so the short could cover. And then the difference they made, that's the $360,000, and then they got the Ethereum back from both those, and then sent that back, and they and basically Fulcrum is out $360,000. They're calling this a hacker, but really what this is a very good smart contract lawyer, somebody that figured out, okay, there's a loophole in this smart contract because it's too complicated, right? And this is something that Bitcoin developers have been warning about for years. And the reason why Bitcoin does not have Turing completeness, because it is hard to examine all of the edge cases and corner cases like this, where you can get exploited. And I'm actually kind of surprised that this is one of the first ones, cases that's become public of an exploit like this, because I mean, if you study it enough and figure out different ways around the Solidity language and the exact smart contract, none of these are really that secure, or they don't have any security proofs of their unexploitableness. And this one clearly was exploitable because somebody got $360,000 out of it. And of course, because they saw that, they they basically stopped this chain or stop the services, right? Like, how decentralized is it if somebody is stopping it? But yeah, that's essentially what happened. And somebody was clever enough to figure out how to exploit all 3 or 4 of these services in such a way as to get as much money out of it as possible. So, I mean, it's I'd hate to say I told you so, but I told you so, right? Like, we've been saying it, like, Ethereum's too complicated and it's very hard to secure, and you're going to lose your money. Like, you play with this stuff, you're basically playing with fire, and it's only a matter of time until losses around this stuff are sort of like spread out among all the participants, or Vitalik has to bail you out or something like that. But this sort of stuff is just inevitable on this platform.
Yeah, and I know I've been on stage many times just making fun of the concept of DeFi. There's no such thing as DeFi. There's no such thing as decentralized finance. You now have somewhat decentralized currency to use in your finance, which is Bitcoin. But there's not going to be decentralized finance because someone ultimately is responsible for things in a contract. Someone has to be responsible. Otherwise, this is going to keep happening. And then you're still responsible. So we'll see how it goes. You'll always have the ability to turn this shit off, because that's not how it works. So this attempt to be the next guy to do something, it's not going to work. And it's embarrassing, and it's basically making the whole crypto space look stupid, basically.
I think they should really just call it unregulated finance, because that's all it is. It's you don't have to follow any of the rules that are there for everybody else. So maybe you get some sort of advantage, but it's completely insecure for that reason. So it's like,
And the DAO hacker didn't actually hack anything. He read the contract and said, "Hey, I'll take this money."
Yeah, I mean, it was a DAO lawyer, really. It's somebody that just knows how to read smart contracts and figure out escape clauses. This is exactly what a good tax lawyer does, is they look for loopholes in the tax code, and then they use them to your advantage.
And once again, we'll just quote Udi before we move on. Some DeFi app shits the bed today, got exploited, and got turned off, kind of like IOTA a few days ago. For the next 24 hours or so, everyone on Twitter is going to be a version of me. We
Yeah,
like
pretty
Udi.
much.
Udi, can't wait to see you again at Understanding Bitcoin. A little plug. This is where many of the developers meet, and we're going to talk about one more in a second, and do cool presentations. There's Udi right there with the sunglasses. So looking forward to seeing you back in Malta. We'll try to get Jimmy there as well. All right, we're moving on to Lightning, unless you want to say anything else, Jimmy.
Let's move on to Lightning.
All right, so Lightning Labs raises $10 million because they decided not to print their own money with a shitcoin. And here are the details. Obviously, some VCs are involved in this Lightning round, in this Series A round for Lightning. And about 6 months ago or so, Lightning Labs also announced their I guess, for-profit project called Lightning Loop. Here are the details of Lightning Loop. Lightning Loop is a for-profit project that helps you, helps merchants run their Lightning nodes, kind of like Casa and other node projects are for-profit companies that help you run a Bitcoin node. I'm not a huge fan of those. I prefer people learn how to set up their own node. Again, I'm not. We'll see Jimmy's thoughts about that, but it's not necessarily bad. So because of all of this, Bitcoin haters and Lightning haters have put out several articles that just because Lightning Labs raised money, it means that the entire Bitcoin ecosystem is centralized and for profit, and they can do whatever they want. This article, I'm not a Lightning expert at all. I'm gonna try and get myself more acquainted with Lightning. I don't really use it much because on-chain transactions are fast and cheap. But to me, this article is completely ridiculous. Before I make myself sound stupid, I will let Jimmy say a few words, and then I'll point out a few things in this article.
Yeah, so basically Lightning Labs raised $10 million, and in the same post where they talked about raising $10 million, they announced sort of some optimizations to Lightning Loop. Now, if you don't know what Lightning Loop is, it's essentially a submarine swap service. So if you don't know what a submarine swap is, oftentimes in Lightning Channel, especially if you're a merchant, you're receiving lots of money from different people. And oftentimes what happens is that the channel capacity gets exhausted, so they can pay up to 0.1 Bitcoin or something like that in a particular channel. As it gets higher and higher and closer to 0.1 Bitcoin in sales that you've made, you need to cash that out back on chain, and that's where a submarine swap comes in. Essentially, what you can do is get Bitcoin on chain, but keep that channel open and increase the capacity back again so you can receive more money. That's what a submarine swap is. What Lightning Loop does that's different than other submarine swap services, and almost a lot of Lightning wallets now have this feature, like Breeze Wallet, for example. You can basically get paid out on chain, and they essentially do a submarine swap for you, so your capacity or how much you can receive increases and so on. Is that they batch a lot of these submarine swaps at the same time, and that saves you on-chain fees. Now, this isn't that big of a deal right now, but later on, when there's the scarcity of block space becomes more of an issue, this should save a lot of money for people that are sort of cashing out of Lightning. So instead of closing a channel, reopening a channel, and doing it that way, what you could do is a submarine swap and have a bunch of them in a single transaction, and that savings, Lightning, they could take a little bit of the profit there, and that's what they're planning, and they want to be that. Now, is that centralized? I mean, in the sense that they're running the service, absolutely. But it's decentralized in the sense that no one really actually knows what's going on. All of the proofs and stuff like that are done in a way as to actually nobody knows anything about each other. I have no idea who is doing that Lightning node, unless I happen to be also a merchant or whatever. So that's basically the idea behind this thing. And like as usual, people that are spinning this to be, oh, this means like Lightning is like completely centralized or something like that. They have some of the truth, but not enough of the truth for like what's actually going on. They much like Roger Ver likes to like sort of criticize things and like not tell the whole story as to make himself sound more right than he is. He's I mean, this is exactly what this article is like. It's FUD, right? And good FUD tends to have a little bit of truth in it. This has a little bit of truth in it, but most of it is actually kind of really like it's again a rhetorical device to get you to sour on Lightning when really you have no reason to. It's you have the privacy and anonymity and everything else to the extent that you want to have.
Not to mention that this is not the only company that's going to be doing this. There's going to be like dozens of these things.
Yeah, I mean, there already are, right? Like Breeze Wallet has a submarine swap out. I think there are other. I think Zap might have something similar. I mean, this has been sort of like a consistent way to a business model for a lot of these Lightning companies. So that seems to me a reasonable thing.
Isn't it like accusing Casa or Nodal or the other five? I mean, one of them is sponsoring the Unconfiscatable. It's called Start9. Another plug right there for one of the sponsors. And they're also, providing you with the infrastructure for you to run your own node. They are, where are they? Right there, Start9. So isn't it like accusing them? Well, this company is putting together a node that they give you, that they sell to you for profit, and therefore Bitcoin nodes are centralized across the world.
Yeah, I mean, it's something like that. And, I mean, this is any company is centralized, right? And any individual is centralized to be decentralized. So like all the point is that the Bitcoin network is decentralized, but there are players within it that are, of course, centralized, like like Blockstream or Xapo or BitGo or whatever, and that's okay. That's part of the idea, is that you have a lot of self-sovereign entities that are doing their own thing, and Lightning Labs is certainly a self-sovereign entity that's doing what they think is good for the ecosystem. And I happen to think that they're a very good player in the space and very good for the ecosystem, unlike say like blockchain.info or something like that still hasn't added SegWit, for example. But yeah, this is normal part of business. And it's just sort of, again, it's a rhetorical device that's meant to confuse those that are unsophisticated or don't understand what's going on. And they put, like, just like any news, you can put whatever spin you want on it and make it sound like something it's completely not, by adding just enough truth to make it sound however way you want it.
All right, and there is another one. So this was a paper that was put out, and Christian Decker was one of the people that was involved. It was a research paper. Like, look, at least there's actual science going on trying to make sure that the Lightning system stays decentralized. And now the science of the people building it, making sure that it works properly, is being demonized about how centralized Lightning is with their nodes. So basically, you're building something, you want it to be decentralized, you're pointing out the potential flaws in it and how to avoid them. And that research is being demonized, that Lightning is fully centralized and everything should be on chain. Do you guys realize that if it's on chain, then the entire network is centralized?
Well, so so let's talk about this particular paper, because I did read through a lot of it. And essentially what the paper says is that a lot of the really connected nodes are staying close to each other, have fat channels open and so on. And a lot of the capacity is connected to these nodes on the network that are very highly connected. And this is to be expected, because this is just like the incentives of the network. If you want to find a route, you're going to want to connect to other nodes that are very well connected and so on. And that essentially they came up with different metrics to measure how quote unquote centralized the Lightning Network is and so on. And they found that, according to those measures, a lot of the channel capacity is in a few nodes. And they tend to be kind of like a hub and spoke model where a lot of people connect to a single place or several single places and so on. And to some degree, I expected that. Now, what's the actual fix? Part of what's happening on Lightning is that people want like super cheap fees and very quick transactions, and it's not necessarily optimized for anonymity or routing that makes privacy a priority. Now, as people demand more of that, the network graph will change. But right now, what people want to do is they want to have very quick transactions and very, and they're not as concerned about privacy, and they're willing to go through these, these hubs in order to do that. Now, like just so you know, on the Lightning Network, any intermediate hop knows nothing about the two endpoints, right? Like, and that's one of the features of it. So in a sense, you still have anonymity. It's just that as far as like, if one of those nodes shuts down, what happens and things like that, that's just something that everyone's going to have to learn as a result of like playing with this network, is that once one of these nodes goes down for, I don't know, like 12 hours or something like that, kind of like how, Coinbase used to go down during the run up or something like that, people learn to not trust Coinbase as a result. You're going to learn not to trust a single node, right? Like single Lightning node. You're going to learn to trust multiple ones, or to have a lot more, variance in how you do that. You're also going to want to optimize a little more for privacy and so on as you learn about all of that. And, like the network simply just isn't mature enough to have learned those lessons. And I think that's what this paper is pointing out. Now, a lot of people are using it like, in this article to make it sound like, oh, Lightning is doomed because it's centralized. No, it just hasn't evolved enough yet. The more people use it, the more demand there's going to be, so that there aren't service interruptions, but with a single node going down and things like that. And this is where entrepreneurs can come in and say, okay, well, I'm gonna make a node here, or I can make a node here, and I promise to have this policy, or I can prove that I don't know anything about you, or like you can do various things to make this better. And this is where entrepreneurs come in and can make things better. And this might be a good business idea. I don't know. But that's essentially what this paper is pointing out. And I don't like how they keep spinning it this way. But unfortunately, this is kind of like the rhetorical war that we're involved in.
All right. Maybe you can do a read through of this paper on your show, Jimmy.
Yeah, I might. I'm definitely including it in my newsletter for tomorrow. And I'll have some thoughts about that on my show tomorrow.
Look, I have a master's in financial engineering. It was a long time ago, but I glanced at this, and some of this math is. I remember some of it, but it's not easy, guys. Most people that wrote this article, they probably don't have a PhD in math, which Christian.
No, they certainly don't. They probably don't understand most of even the metrics, or it's heavily into graph theory and like you can measure Gini coefficients using channel capacity and things like that. Not even sure they really understand what channel capacity is, but who knows? I don't know. I assume for the most part that reporters know a wide variety of things at a very shallow level, and very rarely do they understand things at a deep level.
And hey, if you guys want to ask Christian Decker about this research, he hopefully will make it back. We'll find out for sure soon. Hopefully he'll make it back to Understanding Bitcoin, where he did some awesome Lightning demos last year. All right. That's the plug. One more plug for Unconfiscatable. We are back in Las Vegas. Jimmy is coming. Poker tournaments, carnivory dinners. Here's the speaker list. Come join us. Thank you again for the sponsors that are helping out with this year's event, from Embly to Bybit, Alpha Point, everybody. So thank you guys. You are right there on the website. And the Financial Summit is coming back to the Dominican Republic. Well, it's starting in the Dominican Republic for the first time, but it is coming back to Bali in November. So April and November for you traders and hedge funds. All right, Jimmy, I'm going to do a quick 5 minutes on price, but let's plug your book a little bit.
Yeah, Programming Bitcoin. It's available on Amazon from O'Reilly. It teaches developers about Bitcoin. The other book that I have is Little Bitcoin Book. It's a book to give to pre-coiners or yourself if you want to have the right arguments for a lot of the Bitcoin stuff. You can order it on Amazon as well. It's available also in Spanish and Portuguese. We're gonna get out Hindi pretty soon, I think. Arabic, Turkish, Vietnamese, they're all done. They just need to be laid out and things like that. And we're working on Mandarin, Korean, Dutch, and German, and French, and many others. So yeah, that's it's also available on audiobook. My programming blockchain course is coming up in San Francisco and in Antwerp, Belgium, for the next two conferences, or two of the next conferences that I'm going to be at after Unconfiscatable, of course, Bitcoin 2020 and Bitcoin Reformation. So should be a good time. If you want to learn about Bitcoin from me, that's the next time you can do that.
All right, awesome. We'll let you go, Jimmy. No need to sit through the whole price thing, even though it's going to be very, very quick. Your call. Feel free to stick around. Otherwise,
Fiat Delenda Est. This song is done.
All right, guys. Let's take a brief look at the price of Bitcoin. Thank you so much, Jimmy. So yesterday we were doing a live show with Joe Sass when the big crash happened. Now, during the crash, we were looking at the new tool that Joe was talking about. So go check out that show where he was looking at the order book volume on a short level time frame as it was falling. And from a bigger picture, this crash did not concern him, and he was anticipating a bounce. A little bit of a bounce came this morning. You can see us going, well, on a daily chart. It's hard to tell. I'm sorry, this is the weekly chart. Sorry, that was the monthly chart. Or this is the daily chart. How did my chart get flipped? Okay, here we go. That's the daily chart. So what is this? There we go. So this is the daily chart. I'm gonna have to go into the 4-hour chart. The 4-hour chart, we had a little bit of a bounce immediately after, but it didn't take us back to the level of the breakdown. This current situation is actually concerning me. The initial drop did not concern me, but this current situation does concern me. I have no idea what tried to mute myself, not to sneeze on camera, but couldn't help it. Had to find the mute button. So this current drop does concern me as it's happening right now. So this is my style of trading. Everyone has their own. So for me, whenever something falls and then it has a little bit of a dead cat bounce, and then it comes back and approaches that same area, that's a problem. So for me, this is problematic. And there is a high probability now that this price is going lower short term. I'm not sure what Joe was thinking from the order book perspective because I don't see that data. But while yesterday it looked pretty good, that there will be a rebound today, I'm not sure. I have no idea, right? You have to check that area. So what does it mean from the daily chart and what does it mean from the weekly chart? From the weekly chart perspective, this doesn't change much. We have broken the area of resistance, but we are falling back, and we are sitting right at that area of resistance. The sequential is still on a 6 of 9, with the 7 candle showing up in a matter of hours. We got about 8 hours to go, and we will have a green 7. So there is still, it's still in a bullish trend. So a single red week does not change the bullish trend, especially when that week is not even halfway down the prior candle. So the weekly scale remains bullish, and it's still above the area of resistance. The daily chart, on the other hand, is starting to get a little bit bearish, but we don't yet have a red 2 below a red 1. Notice how it tops on a 9, which is something I warned everybody about. Now, this looked very, very promising. Yesterday, when we were doing the show and we were having a red candle, I said I would be very bullish at the break of this green line with a green 2 above a green 1, ideally, but a break of the green line is what would make me bullish. But we fell instead, which is fine. And we have crossed the stop and reverse point. So now the daily chart looks very, very bearish, but according to sequential, there's no short trade being activated yet. Perhaps tomorrow, when a red 3 goes below a red 2, that would activate the short trend on a daily scale, but that goes against the weekly chart, which kind of still remains a little bit bullish. Okay, so keep that in mind. And that's about it. I'm not going to talk about the stock market. It is the weekend. The 4-hour chart, I don't like this pattern. I don't like it when you fall and then you go up a little bit and then you start to break those lows. That usually doesn't end well. I'm trying to find an example here where that's how things generally break down, as they usually do. Now, no idea how long that would last, but that's just a very brief line. All right, guys, I got to get going. Lots of things to get done. We'll end it here. Once again, don't forget, unconfiscatable. You still have 1 week to decide and get to Vegas. All right, it's going to be a lot of fun. It's going to be a great conference. Lots of really good speakers. The Financial Summit, Dominican Republic, April 19 to 25, and Bali, Indonesia, November 1st to 7th. Check out the description. It is for successful traders, successful hedge funds, and higher net worth individuals looking to take control of their finances. Also, understanding Bitcoin tickets will go on sale right after Unconfiscatable. Hey, and don't forget, guys, we are voting for the scammies. The fan vote will count for 33% of the votes. I've started tweeting out, retweeting Unconfiscatable's votes. These were your finalists for each of the awards. You can check out the awesome graphics. Please vote for your favorite winners. Most of the awards are the Golden Pump. You can see it in the picture right there. You have the Golden Pump Award, but we are trying to come up with some other cool awards. For example, we have the Darth Vader Award for former Bitcoiner turned shitcoiner, and here we go. There's your Darth Vader Award. So check these out. Please vote. We want a really fair Scammy Award show, and this counts for 33%, and the other 33% will be done from conference attendees and some of the other people that are more directly involved with the conference and are able to get to the conference. All right, guys, thank you so much for watching, and I will hopefully see many of you in Vegas. Bye, guys.